There's a company that most people have never heard of. Yet it might be one of the most powerful trading firms in the world. Last year alone, this company reportedly made more trading revenue than Goldman Sachs, Bank of America, and Citigroup. It is estimated to be involved in over 10% of all stock trades in the United States. And some people now believe it might also be influencing the price of Bitcoin. The company is called Jane Street, and the story behind it is pretty wild. Jane Street was founded in 1999 and operates out of New York. They only have around 3,000 employees, but the average employee reportedly earns over $1 million per year. Unlike hedge funds or banks, Jane Street operates as a quantitative trading firm. That means they use complex algorithms and massive amounts of data to trade markets automatically. But here's the interesting part. Because of how their company is structured, they don't have to publicly disclose many of their strategies. So a lot of what they do remains hidden from the public. Things get even more interesting when you look at Bitcoin ETFs. When people buy Bitcoin through an ETF like BlackRock's EBIT, they're not actually buying Bitcoin directly. They're buying shares of a fund that holds the Bitcoin. To make this system work, special firms called authorized participants manage the creation and redemption of ETF shares. And Jane Street is one of only 4 companies in the world allowed to do this for the largest Bitcoin ETF. This gives them a very unique role in the system, because they help control the flow of money in and out of the ETF market. Around late 2025, some traders started noticing something unusual. Almost every trading day, Bitcoin would drop 2 to 3% at exactly 10 a.m. Eastern Time, right when the US stock market opened. This pattern happened dozens of times in a row. Some analysts suggested that large institutional trades during low liquidity periods could be triggering these moves. And when Bitcoin drops quickly, it often triggers liquidations. That means traders who borrowed money to buy Bitcoin are forced to sell when the price falls. This can create a chain reaction where the price drops even further. Some people believe a large trading firm could potentially profit from this situation. The theory goes like this. First, buy Bitcoin. Then open massive short positions, betting the price will fall. Next, sell large amounts of Bitcoin quickly during a low liquidity window. That selling pressure pushes the price down and triggers liquidations. The short positions profit from the drop. Then Bitcoin is bought back at a cheaper price. If repeated over time, this strategy could generate massive profits. Now, to be clear, this is only a theory, and there's no confirmed evidence that Jane Street is doing this. However, there are reasons why some people take the theory seriously. In 2025, India's financial regulator banned Jane Street from trading in its derivatives market, accusing the firm of manipulating price movements. Regulators claimed the company used a strategy described as morning pump, afternoon dump. Jane Street has also been mentioned in lawsuits connected to the collapse of the Terra crypto ecosystem in 2022, though those claims are still being debated. So while nothing has been proven in the Bitcoin case, these events have raised questions. But the real story here may not be about Jane Street at all. Bitcoin was originally created to operate outside the traditional financial system. Yet the moment Bitcoin entered the ETF world, it also became connected to the same institutions that control traditional markets. And with that comes the possibility that large players could influence price movements. That doesn't mean Bitcoin is broken, but it does remind us of one important idea in crypto. Not your keys, not your Bitcoin. Holding your own crypto means no one can liquidate you or control your assets. But I'd love to hear your thoughts. Do you think large institutions can manipulate the Bitcoin market? Let me know in the comments. And if you enjoyed this breakdown, make sure to like the video, subscribe to the channel, and turn on notifications so you don't miss the next one.